Now, as has been the practice, I shall be announcing several measures which aim broadly to enhance, number one, customer protection, number two, advance financial inclusion, three, enhance the flow of credit, four, strengthen the UCBs, promote ease of doing business, especially for NBFCs, and deepen the financial markets. For customer protection, we will issue three draft guidelines. One related to mis-selling, this has been in the works for some time. Two, regarding recovery of loans and engagement of recovery agents. Three, on limiting liability of customers in unauthorized electronic banking transactions. It is also proposed to introduce a framework to compensate customers up to an amount of 25,000 for losses incurred in small value fraudulent transactions. You are all aware that there has been a number of fraudulent transactions for which RBI has taken a number of measures, and we will again in this regard we also now wish to publish a discussion paper on possible measures to enhance the safety of digital payments. Such measures may include lagged credits and additional authentication for specific classes of users like senior citizens. In the financial inclusion space, we have comprehensively reviewed three schemes: the lead bank scheme, the Kisan credit card scheme, and the business correspondent model. We shall issue draft revised guidelines with respect to each one of them. It is also proposed to launch a unified portal for better management of the lead bank scheme data. The limit of 10 lakh rupees for collateral-free loans to MSMEs is proposed to be increased to 20 lakh rupees. This limit has been there for quite some time. Coming to the real estate sector, to further promote financing to real estate sector, it is proposed to allow banks to lend to REITs with certain prudential safeguards. I may mention that lending to InvITs, which are similar in structure to REITs, is already allowed. Now I have four measures for the urban cooperative banks. They are an important link in our financial inclusion effort. The first two pertain to raising the financial limits on unsecured loans and loans to nominal members by the UCBs. We also propose to remove the tenor and moratorium related requirements on housing loans given by Tier 3 and Tier 4 UCBs. Then, to strengthen the managerial and technical capacity of the UCBs, we shall launch a mission which we call Saksham, which stands for Sahakari Bank Kshamata Nirman. This mission intends to train over 1,40,000 participants, officials, members, directors from the UCBs. I now come to NBFCs. There are two measures for them. NBFCs having no access to public funds and having no customer interface with an asset size not exceeding 1,000 crore rupees are proposed to be exempted from the requirement of registration with the Reserve Bank. Moreover, it is proposed to dispense with the requirement for certain NBFCs to obtain prior approval to open more than 1,000 branches. Coming to financial markets, you are aware we had earlier issued revised draft regulations for ECBs, that is external commercial borrowings. These regulations have been finalized. They shall be issued shortly. We also propose to remove the limit of 2.5 lakh crore rupees for investments under the voluntary retention route. Investment through this route, that is the voluntary retention route, in each category of securities, central government securities, state government securities, corporate bonds, will be subject to the investment ceiling for the respective category under the general route. Furthermore, in pursuance of the announcement made by the Finance Minister in the Union Budget of 2026-27, we propose to issue the regulatory framework for derivatives on corporate bond indices and total return swaps on corporate bonds. It is also proposed to issue draft revised guidelines for authorized dealer banks and standalone primary dealers, allowing them more flexibility in undertaking foreign exchange transactions.